Hello, hello. So Tesla had just announced their earnings report and it looks like they are growing the revenue by 42%, which is amazing, but had a little bit of a margin decline. Let's examine the financials in detail. Let's examine what happened during this earnings report. So they did report earnings and the results sent the stock about 2% after hours. We will examine where it is right now, actually, after we're done with the report, of course. But let's break it down. Earnings per share 2.27, that's adjusted, of course, versus 1.81. So they basically crashed on this one, much better EPS than expected. Now, revenue is a little bit lower than expected, but still pretty high. I believe that they may have had some very high expectations here potentially. Now, automotive gross margin came in at 27.9%, which is a little bit down from the almost 33% last quarter and the 28.4% a year ago. That is of course impacted, by inflation, more competition. It cuts down on margins, but still, this kind of margin is very healthy and nice to have. Now, you will see here that early this month, Tesla reported deliveries of 254,000 about electric cars for the period of that was ended in June 30, which was showing a 27% growth from the year ago quarter, but an 18% decrease sequentially. Now, you cannot expect the company to be growing their sales and revenue and net income forever. They will be having some quarters or years that are going to be not as great as the previous ones, but overall they are still growing massively, and it's nice to see. I mean, they seem to be doing better and better, and the problem with this company has always been the fact that they have had an expensive stock. Now, the business itself is pretty nice, and it's obviously a very trendy business as well. But the problem is that it used to be extremely expensive, and we will examine whether that's the case right now as well. But it probably will be the case, even though it has fallen down quite a lot lately. Now, they have announced some headcount cuts also as well. They will be laying off some people here. But another very interesting thing to notice is that Tesla's cryptocurrency holdings also declined in value substantially, depending on how the company traded them. Now, Barclays analyst Brian Johnson said on Monday that he expects Tesla to record an impairment of up to roughly 460 million due to Bitcoin declines. Interesting stuff here for for the Bitcoin that Tesla was holding. So nice to see for the overall market, I should say, that definitely helps pretty much the whole stock market propel a little bit upwards potentially in the next few days after being battered for so long. Now, you will see here that they have, there are a lot of articles talking about how Tesla actually missed on quarterly revenue, but still they seem to be growing very nicely here. And a lot of articles came out here talking about Tesla. Now, let's examine some other details about Tesla here. Taking a quick peek at inside the trades, you will see that there have been some sales here, quite a few actually, and it looks like there's quite a lot of stock being traded here. You will see that the securities transacted are quite a large amount when compared to the securities owned here. Now, they haven't actually traded everything, but some of these are pretty large amounts. Now, this is nothing to worry about too much, because these are officers, for example, these are executives, and they want to be making some money, some compensation, and Tesla stock is part of their compensation. So what I would mostly like to see here is potential buys. I'm not saying anything like that here, but I'm going to check the senator trades as well. So what do the senators do in terms of Tesla? Two purchases here, how large are they? That's a pretty large one, from 100,000 to 250,000. We never have an exact number. When they are filing for the trade, they have to give an about number. It's like a range, so we don't know exactly, but it's between this amount. And Josh Gottheimer, who has been selling a lot of Tesla actually in the past few days, lately has been purchasing some. Now, that's not much. Maybe he purchased because it was down in price or so. Overall, it's interesting to see that we have more purchases actually here than any other sales, but overall it's been going down in terms of an absolute number, 6 here, 2 here. Okay, so let's take a little bit of a look at the metrics now. See what the company is doing right now in terms of their metrics. Now, the P ratio has gone down, and it used to be much higher, if you remember, at some point, super high. So as they're making more money, it seems to be getting better and better. The price to free cash flow is still expensive though, and they have been issuing quite a lot of shares. As you'll see here, their outstanding shares count has been increasing, and these are things that I hate to see from a company. They do have quite some debt here, it looks like. We will examine that in a little bit more detail. The revenue growth of the company, though, has been tremendous. Net income, free cash flow, everything in terms of how they are doing financially is great. The problem that I'm seeing here is that they may be more expensive than what I would like to get, but they are doing pretty nicely, and they have a nice return on equity, and the net income margin keeps increasing here. Although, yeah, it has been a little bit worse than the previous year, I suppose, but still doing rather well. Now, let's examine a little bit the financial statements. The income statement here from 11 billion to 53. This is insane in terms of revenue. They have been growing the revenue tremendously here. And in terms of net income, it's something that I like to see from a company that eventually manages to get into positive territory, because they were losing 2 billion and now they're heading to a 5.5 billion win, basically, but that was 2021. We're going to see what they're going to be doing this year. We can always examine the quarterly, but I do like to take a look at, so they are doing pretty well already, but I do like to take a look at the annual as well. Just they give me a very, very clear picture of how the company has been progressing through years. It's nice to see. And the balance sheet of the company as well, you will see that the total equity has been increasing also pretty nicely, 31 billion. But remember, they have been also issuing quite some shares here, so that can play a role in that. Now, the additional paid-in capital, as you can see it here, basically adding to the assets of the company because of investors pretty much buying more Tesla that the company issues. Now, the cash flow is a little bit of a weird thing here, from 2 billion, from losing 2 billion to 5.5 is the net income. And when we add back all the pretty much non-cash items here, you will see that the cash from operating activities is skyrocketing here at 11.5 billion. Is what it is right now. A lot of stock-based compensation, a lot of depreciation and amortization going on here as well. It plays a deep effect on what the company is doing in their net cash, but they did quite some great net income here, so that really affects it as well. And in terms of investing, the company has been pretty much, for the most part, investing in capital expenditures. And in terms of financing activities, you will see that the company has been paying back some debt, and also over here, financing themselves through debt is another interesting thing. They do have 18 billion in terms of cash, actually, which is a pretty large amount here, especially when you compare it to the free cash flow, which is 3.48 billion this last year, basically. And if we take a look at the balance sheet, you will notice that their total liabilities here we're sitting at 31 billion, which is substantially more than their free cash flow. It's about 10 times their free cash flow is what we examine here in our stock analysis metrics tool. You notice it was something like 10. Over here, about 9. So yeah, they do have quite some total liabilities compared to the free cash flow. Now, that may not be super concerning, but it's something to at least be wary about. The next thing and the last thing that I want to do is take a look at our stock evaluation tool and try to derive a value and see whether it makes any sense to be buying Tesla right here. Before we do that, we can take a little bit of a peek at the analyst price targets, pretty much coming from actual articles here from a lot of different companies. Very variable price targets from 1,000 to 800 to 380. It really depends on which analyst you are asking, basically. But a lot of these are heading for 1,000 or so, or even more, is what they're predicting. We'll see what happens, of course. It's always worthwhile to be taking a look at what the market thinks about Tesla and any other company for that matter. But let's examine what we want to be buying the company for. And the revenue growth of the company has been tremendous. Take a look at these averages here, and they are doing pretty greatly right now as well. So I won't be going that high because a lot of extra competition, a potential that the economy is not going to be that great as it used to be in the previous years, and also the fact that I want to be conservative. So I will still go high because the company has been achieving pretty high revenue growth, and it doesn't make a lot of sense to go like 5% for the next 5 years. It's going to be too low, I believe. So I will go 15, 18, and 21. See what we're getting out of this one. Now, the net income margins of the company have been increasing pretty nicely, and they still seem to be increasing. So I'm going to go a little bit higher here, 10, 12, and 14 is what we're seeing from the report as well. We talked about the margins getting a little bit better. The free cash flow margin is sitting at about, actually a little bit of a weird range. It's going up and down quite significantly, as you'll see. And lately they have been doing much better in terms of their free cash flow. 63% over here, but 400% in this one. It's a little bit of a curious case, but I think I'm gonna go with something that will be around the average that you typically want to be achieving, which is always something near 100%, basically the same amount of net income. So I will go 80, 90 and 100 here and see what we're getting out of this one when I hit the calculate button. So let's hit calculate and see what we're getting now. So yeah, as expected and as we have talked about in the past, Tesla is expensive. That's the big thing about Tesla. It's a company that has been doing nicely and it seems to be growing pretty well, but it is expensive for what it is, and I could potentially see it near maybe 150 to 200 bucks. Could be an interesting, interesting time to buy this one. Maybe even 200 if you're feeling a little bit frisky. But for 742, this is just too expensive for me. So I would have to pass, even though the company is doing nicely at the moment, and they haven't been affected terribly by the recent slump in the markets. If we take a look at the 1 year high, yeah, it's been down, but there have been companies that were overvalued that are down like 80% or 90%. So this is down about 40%. And we'll see what happens in the next few months or maybe a couple of years or so. But at this current price, I just can't see myself entering this company. It is expensive, and I would potentially want to avoid it, at least for a while, till it gets to a much better valuation, if that ever happens, and goes straight down. It will have to be at a much lower price, as I mentioned, maybe around these levels. It would be where I would buy if it ever happened. But right now, I'd have to avoid this one. Thanks for watching, I hope you enjoyed, and hopefully that was interesting for you. Remember to leave a like if you did like this video, and you can always subscribe and become a patron and get access to this tool, the one that I'm using in my videos. You can find links in the description box below this video. Thanks for watching again, guys. See you soon. Bye-bye.